Hello and welcome back to Dukascopy TV. Is now the time to get excited about reinvesting in the United States of America? Not yet, I hear you say, or some of you say. But can investors realistically make some sort of a decent return in this fiscal cliff environment? Well, Sergio Rivera seems to think that there is a chance that we can. Sergio, welcome to the studio. You run a company called Rivera Capital Partners. Just based on that idea that we're seeing post-fiscal cliff agreement, if you like, is there any kind of opportunities? Can we get excited about anything relating to investment in the US at the moment?
Well, thank you, Thomas, and thank you to Dukascopy TV for having me here. The short answer would be that you cannot indiscriminately get excited about any one market, not the US, not Europe, not equities, certainly not bonds, which I believe continues to be one of the most dangerous asset classes in the markets right now. But you can certainly find within the US some areas that offer pretty attractive opportunities, especially now that at least the first hurdle, which is the fiscal cliff threat, which we had all towards the end of 2012, has been put behind us.
Mm-hmm. But it's been put behind us, but perhaps it's slightly temporary or short-lived, because I mean, there's many analysts would say that it's simply kicking the can down the street, if you like, to use that phrase, that something needs to be tackled at some point, perhaps this year or next year. I
think that given the current scenario, there are still opportunities, just as the ones we're finding for our clients, that can offer interesting double-digit returns in the short term.
Now this, I mean, following on from that, this idea with your clients and the work you're doing at the moment, real estate's a big thing for your company at the moment, isn't it? In the US, that I understand that you're currently developing land in Texas at the moment. So essentially, you found something in the US that you feel is going to provide you with decent returns. Can you tell me a little bit about it?
Well, yes. Investing in real estate really knows no borders now. For instance, at the very high end, global real estate has become a sort of international currency for ultra high net worth investors. So you can compare investments in London, Paris, New York, and there are no borders in that sense. The opportunity we found, however, is not at the very high end, but I would say at the upper middle class end, and not in New York, but in the south of the US, in Texas. Mm-hmm. We are playing on a very interesting combination of dynamics. On the one hand, recovery in Mexico, which always has been linked to the US. So as the US economy gains more confidence, so is the ability of Mexicans to export to the US. And
that's they want to live there for security reasons and...
right. The Mexicans are beginning to do well in Mexico. But as you correctly mentioned, there are personal security issues in Mexico. Despite the fact that I love my country, I have to acknowledge that the wave of kidnappings and the problems related to drug trafficking have not been solved. So as a result of that, you have many families who are doing well in Mexico are now seeking not only a vacation home in the US, but actually a permanent home. And Texas offers proximity to Mexico, offers great deals in land. So on the one hand, we're banking or leveraging the prosperity in Mexico, but at the same time, there hasn't really been a true recovery in housing. So you can still find very attractive opportunities for residential and commercial property in the US and in the state of Texas in particular.
But you said you found a market there with Mexicans in particular, but is there, can this span out beyond, say, high net worth Mexican families moving out of Mexico into Texas, maybe Houston, places like that? Does that extend beyond Mexico and Mexican families?
Yes, indeed. For instance, in markets that were extremely depressed, such as the Miami real estate market, you are seeing, in that particular case, Brazilians going after distressed properties and some of the higher end properties as well. You see in states like California and Arizona opportunities developing as well. And I would say that it's not only building houses and developing residential land for them, but once the families are going there, and for instance in Texas you have a tremendous double-digit dynamic growth in terms of migration to these areas. Once the families live there, they need to go to the pharmacy, they need to have a dry cleaner nearby. So the second opportunity we're focusing on is developing what is known in the States as strip malls, properties that are anchored by a large drugstore or a department store, and then putting lots of shops which share the parking lot with the anchor store. And the development of these opportunities is offering us over a 3-year period returns in the magnitude of 30 to 35% or so.
So 30 to 35% over 3 years. Over 3 years, and that's your return over 3 years. This
is for our investors. We actually, as developers of the land, have access to even more interesting returns.
So so you're essentially saying then, Sergio, that there is plenty of opportunity in the US. There always has been, regardless of the worry over this so-called fiscal cliff.
Indeed, indeed. Yeah. While you see a continued recession in Europe and limited prospects of growth, be it in the UK or the rest of Western Europe, the US, I think, having been the first one who went into the dip, has been the economy to come out first.
Right.
So, of course, problems need to be addressed still, such as the big fiscal imbalances. But I would say that, like everything, real estate is local. Credit tends to be more on a national level, but if you spot the right opportunities, as we are trying to do for our investors, we believe that you can achieve very interesting long and medium-term results.
Sergio, before you go, obviously we try to ask our guests, many of our guests as we can, the Dukas Copy question. If you're not familiar with it, which I'm pretty certain you are familiar with it, but I'd like to ask you again, if you had $1 million US, would you put it in real estate, equity, bonds, gold, cash, and oil? I can tell you now, I think I know where you're going to put it.
We would put it, and we're putting it in real estate.
In real estate, okay. And dare I need to ask you the reason why you're putting it in real estate?
Most attractive short and medium-term returns for our investors.
So, well, Sergio, thank you very much for coming in the studio today and sharing with us your thoughts on the fact that there are still opportunities in the US right now.
Thank you, Thomas.
That's all we've got time for on Dukas Copy TV for the moment. We'll continue to bring you updates and the latest interviews. Also, my colleague Diran is currently covering an economic meeting with the UN here in Geneva, so keep an eye on that when that's put online. But until next time, and from all of us here at Dukas Copy TV, goodbye.